só. Good evening, ladies and gentlemen. My name is Irineu Gianesi. I'm Dean of Academic Affairs at Insper, and it's my pleasure and honor to welcome here tonight for the second session of, or the second day of the European Week in São Paulo. We are having two events at Insper. Yesterday we had a very exciting discussion about social and political themes, and today we have a more a discussion. We'll jump into economic issues, and this is part of an effort, a continuous effort of internationalization of the school, which was by the way recently accredited by the European Foundation of Management Development. We received in March the accreditation EQUIS, European Quality Improvement System. And one of the issues that are very dear to this accreditation is internationalization. And the participation of Insper in this event, which is the second edition. We had wonderful discussions last year also, is to bring international issues to the debate. Insper has been at the forefront of the debate in public affairs and economic affairs in the national arena, and I think you know that quite well. And we are trying to improve or to stimulate more debate about the global themes. So it's very appropriate, and we are very happy to host these events here at Insper. And it's an initiative that we have to thank to my colleague here, Jan Eijsman, Consul General of Luxembourg, who has coordinated last year and this year all these events, bringing to this auditorium exceptional speakers to discuss and to debate with us. So I'll pass to Jan to give more details about today's session.
Thank you, Irineu, for hosting for the second year this get-together for us to approach Europe, to not only to Insper but also to this region in Latin America and Brazil. As my colleagues here are standing, so why don't I introduce you, Dr. Giorgio from the the Italian Central Bank. Eike Berner from the German Central Bank, both economists. Fernando, our today's moderator, and Dr. Cor van Honk, Consul General of the Netherlands. So why don't you please take a seat while I just make some remarks. So as mentioned, this is the second day of our European Week. Tomorrow, and everybody is invited, we're going to have at the Instituto de Estudos Avançados at USP a continuation of this debate. It will be a continuation of our yesterday and today's debate, so it's at 9 o'clock at USP. On Friday we have the event at Fiesp, with the presence of Brazilian's foreign minister and our European ambassador who was here last year, and where we will discuss basically what the agreement between the Mercosur and the European Union as to how we stand. I mean, as probably some people are aware that this negotiation has been going on for the last 20 years, and then so we hope that we will have some news on Friday by that how far we go. I also like to acknowledge the presence of the Consul General of Ireland, Sharon Lennon, our consuls from Italy and Germany also present, and also representing Malta is also present here at our event. Today's focus will be the economy, the social political aspects, the geopolitical aspects of Europe, and we have here a very important group of people who will discuss this with you. And as like yesterday, I'd like you then after each panelist presents himself and debates that a lot of questions. So the idea is that we have an interaction with everyone. But I'd like to finish my presentation here and coming back to the European values. I think we have a slide there. This is what European, in the moment where we are facing today with populism, moments of in Europe, France, Brexit. It's important to see over 60 years Europe has been without a war. It is the longest time Europe has been without a war, and this is an achievement, and I think we can learn from that. And that's what I have the last question, which I made yesterday. How many of you here are descended from Europe? Raise your hand. So that's precise. I mean, we're almost 90%. So that's precisely the reason why we want to bring Europe closer. Thank you very much for attending, and look forward to an interesting evening here.
Gentlemen, the stage is all yours.
Hello. Well, good evening. On behalf of Insper, I'd like to give you my warm welcome to this evening, to this event. And, well, what concerns us here, as has been told, is mostly economics, especially the economic perspectives of Europe ahead. And I'm very honored, very glad to share this table, to say like this, with my dear fellow colleagues, economists, and the General Consul of Netherlands. And just to start, previously, sorry, we're going to organize the thing like this. For the first 15-20 minutes, the General Consul of Netherlands will speak mostly about the advantages of having a single currency in Europe. And then after that, Giorgio will speak briefly about business cycles and the effects of recession, especially in Italy and in Europe in general. And he will be followed by Dr. Eike, who will also speak about business cycles, short-term economics, but never losing from sight the perspectives of Europe in economic terms. But before passing the word to my fellow colleagues, I'd like just to mention a few numbers, a few figures. Well, just today, fresh data for Eurozone GDP has been launched, no? And for the first time in many quarters, Europe is growing faster than America. Actually, annualized rate of GDP growth in Europe, or in Eurozone, is reaching something like 2% yearly, which is pretty much the double of ugly 1% in America. Industrial production in Europe is in its highest rate of growth in April in 6 years. And most important of all, I guess, confidence and expectations are pretty much higher in Europe in this very moment, in a point that has been unseen in 10 years. So it seems that economic growth is gaining momentum in Europe. There's a strength in economic growth, but there are several challenges ahead, I guess. Mostly in bank system in Europe, Italian banks, they have some quite problems. So certainly, I guess we would like to hear something about what will be the whole of European Central Bank regarding these issues, okay? In terms of financial sustainability in bank system in Europe. But, well, that's just to give a warm-up to our discussion today, to give you a couple of figures, okay? And after the speech, I will open the word to the audience to make questions. We're going to organize like this, 3-4 questions from the audience. We collect the questions and pass to the speakers in order to address the doubts or the questions that you might have. Okay? So please, Doctor.
Good evening. I was here last year, and probably a number of you as well. I'm very, very happy that they accepted my returning here. I'm not an economist. I'm a sociobiologist. I studied in Holland and in Germany. I worked in France, and I had a scientific career before I joined the foreign ministry. But I've been working in a number of countries at very critical times in their existence. So I was working in Hungary in the late 90s, and my task was to monitor and help the preparation of Hungary for their entry into the European Union and into NATO. And I have had other experiences. I was born in a small village very close to the city of Maastricht. I don't know whether that rings bells, but that is where the crime was committed. That is where the euro was given its foundation. Before getting very technical and going into all kind of monetary details, there are, I think, a number of things that are being lost in the debate these days. The debate, if you get it from the publicly available media, newspapers, even sometimes The Economist, you can get a somewhat lopsided and somewhat distorted appreciation of what is actually going on in Europe. And that has to do with the fact that people from different sides carry different glasses. Let's say if you were trained, like a lot of the conservatives in the UK, if you were trained in the best traditions of the Chicago School of Economics, personified by Milton Friedman, who helped Maggie Thatcher to reform the UK economy, then you get a very different view from what is going on the continent in Europe. As, let's say, if you are a man like the German Minister Schäuble, who is really from the continental school, where you try to build a social market economy that functions for all, and that gives a completely different view. Then if you are responsible for public finances in, for example, in Greece, then again you will have a completely different appreciation of what is going on. And the moment this turns into a shouting contest, you've lost. Then it gets very, very, very difficult to rebuild confidence and to rebuild solidarity. We've gone through that, and it has found fertile ground because of things that happened in 2007, 2008. I think we are still suffering from the remnants of the banking crisis that came to us. We didn't invent it, we didn't make it, but we were not very well prepared for it at the time, and that had also all kinds of reasons. Now, it's very important to dwell on the meaning of social market economy. It's a market economy. Basically, we leave the economy to customers and producers. but we intervene in the sense that we try to build a society that is inclusive, has justice for all, and opportunities for everyone. And for those people who have difficulty to adjust, we will try to win time. And if they are not able to adapt to changing circumstances, we will try to give them a safety net. It is not very different from what Brazil is trying to do. Brazil also has very rich parts and areas where salaries are much lower, where people have less education, and where, let's say, income standards are very much lower. And that means you limit their access to health and all kind of other things. Now, one of the things we are trying to build is not the most efficient market, even though that would be nice. What we are trying to build is a union in which there is no ground for repeating events that we saw in the first half of this century. I was born in 1952, and I can tell you that I was very happy to leave the house where I grew up when I was 17 to go to university, because it's very depressing to hear nothing but stories about the war. I'm very, very, very fortunate that in my lifetime there has never ever been a war in the European Union. We have never resorted to weapons or to violence, to other than verbal, to settle our differences. And we are trying to build a European society where we try to exclude repetition of events like that. So we're not following all the, let's say, the objectives of what Milton Friedman did, or when David Ricardo formulated his laws in the 1830s. That was about pure economics, that was almost mathematical. Our ambitions go much further. We are trying to build an inclusive society, but we are trying to do it in a responsible way, which means that we come together, we agree on principles, we discuss mechanisms, we create institutions, and we talk about things like solidarity, but above all about discipline. And we don't renegotiate the things we have agreed in Brussels when we go back to our own capitals. Part of the loss of confidence in the European institutions among certain sectors of the population in Europe there's been a lot of research into that. The people that are low on confidence in the European Union are the people that are at the bottom of the pile. Those are the people that are vulnerable, have lost their jobs, are looking for jobs, are not finding the jobs. And we have politicians who go to Brussels, they agree on things, and then they come back and they say on television, I've seen it, that this was an imposition by Brussels. So Brussels has become, in the past, in many countries, the scapegoat of the incompetence of our national politicians. To a very large extent, that is what has happened. Now, the good thing is if you try to build an inclusive society with all the diversity we have in Europe, every country is different. Every country has a different identity, has a different history, has a different structure of its economy. Some of us, Holland, industry in our GDP is 11%. It's very little. Our neighbor Germany, it's very much different. And different economies have sometimes different requirements in order to prosper. If you have an economy where 50% of your population are uneducated peasants, who work on small holdings of less than 2 hectares, and they're trying to compete with big industrialized farms in Brazil, they're going to lose. And then the problem is, what are you going to do? Are you going to retrain them 10 years and then it's not going to work? So we are trying to have a free market, but above all, we are trying to be inclusive for our own society. We are not sold on globalization. We are not sold on ideology, either from the liberal or from the socialist corners. We are trying to build an inclusive market economy. The mechanisms that have been adopted for that, the common market, it started with the Benelux. We went to the common market, and during the years, we have been able to better formulate and articulate our ambitions. And they are summed up there. This is not the complete picture, but you will see it is about much more than just the economy. But if you want to bring prosperity to everyone, economics is a main part of it. The introduction of the euro after Maastricht, at the time when it was proposed, it provoked an awful lot of discussions. The people who took the decisions didn't explain it beyond very general phrases of this is good and this is nice and it fosters solidarity and it does a lot of other things. But it has been very good in the sense that all the economies in the Eurozone have now comparable inflations and comparable interest rates. And that is a very important achievement. The result of it is that there has to be adjustments. For example, if you have an economy where you have a local currency and a 30% interest rate, like one member state had, and then you get the euro and the interest rate drops to 3 or 4%, as it did at that time, everyone runs to the bank to get a credit to buy a new car. You know, that fund will last the lifetime of that car, but it will not necessarily create a lot of investments. For investments, you need all kind of other structural measures that can not only be solved with a single currency. And that brings us to the theme of tonight. What should we do in the future to build this European Union? The euro has been excellent. It went hand in hand with a number of agreements on convergence of the economies, and not all of them have been very well applied by each and every player on the European continent. And I think we have reached the time now that we need to do some soul searching and some reflection on what we can impose on people. And I formulate this in a very negative way because it should of course be the other way around. What people need in order to flourish in their economy, and what kind of priorities and rules should be applied and followed. I think we have to define, perhaps again, what role should be played by the European institutions and what should be the rules and policies applied by the national institutions. I think it is still a bridge too far to go back to the ideals of some countrymen of mine and other people as well. from the 1960s and 70s who thought that we would be a federal union, let's say, becoming the United States of Europe. That is really, I think, at this point in time, a bridge too far, and is not a thing we can achieve. Now, we have to agree on discipline, above all, because without discipline, there will be no solidarity. And let me try to explain that with a very simple number. We have all witnessed the crisis in Greece. The total cost of stabilizing that economy, I think it's around 300 million euros, 300 billion euros, all of it together. Now that sounds like an enormous amount of money. And it is. If you try to explain that to people who are paying their taxes, and it says you're going to pay 300 euros more next year because of this problem, then they make the multiplication of 28 times 300. If everyone fails, I'm going to see my taxes doubled, and that, of course, is not very encouraging. But if you look at what we have done with that, we have stabilized an economy. We have not reformed an economy. We have not necessarily made that economy productive again. A cynical friend of mine said, we have rebooted the computer, but we have not removed the virus. Yeah? And to some extent it is true, but to be honest, 300 billion euros, it is unfortunately a small amount of money if you compare it with a real reform that has been carried out in Europe that no one talks about, but it's quite a miraculous achievement. There was another country that became part of the European Union. It was the German Democratic Republic. It was taken over by, it was reunited with what we used to call West Germany. And they had a free hand in the sense that the government went away. All kind of people who had played a very dubious role in the past also went away, and the German government had free hand in reorganizing that country. Now, today, because there is a website where you can actually verify those figures. Today, the total investment of Germany in the former GDR is 2 trillion euros. 2 trillion euros. Now, imagine if we would want to do a similar investment in all economies that can be improved. We would not be able to generate that amount of money. So it's not a thing we can solve overnight. It is not a thing we can solve just by transferring money. We can help people to stabilize their economy if they really hit the rocks. But the real effort will have to come from inside, within certain rules and within certain guidelines that are provided by European institutions. And I cannot stress, therefore, that it is extremely important to apply discipline and be honest to your people. If you tell people we have to drastically reduce our spending on public services, please explain why. Please explain why. Because then you will also probably be able to generate more willingness on the people that are contributing to contribute more and faster. That's one thing. Have I been speaking 20 minutes? Okay, then I'll try to be very short. So it's when I say a social market economy is not the neoliberalist model from the Chicago School. Just make 3 chess moves in your head and you have explained Brexit. Paying all by transfer, solving all the problems in the European by transfer of money is not a feasible option. There is just not enough money available without structural reform. And one thing you should not do is do not question the solidarity within Europe. Even though a lot of people are younger than I am and they have not been so near the war and grew up with all the stories about it, we all want a safe and prosperous Europe for each and every one. And it's really not that I would, let's say, repeat what General de Gaulle once said. He said, "France doesn't have friends, France has interests." Now, I was trained as a diplomat, and I was trained in that tradition as well. I think Europe is on the road of showing us a big shift in thinking, because this solidarity, it is mutually beneficial interest, all of that is there, but more and more people realize more clearly than ever before that this is not all about money. This is about creating a safe, prosperous continent that is good for each and every one of us. Call it friendship if you want to. Thank you very much.
Thank you very much. Beautiful, beautiful speech. Well, let me pass the word to my friend Giorgio. Please. Just to speak, I guess. Just.
Thank you very much. I will try to say a few words on Italian economic situation. I'll try to be brief as to leave more room for the Q&A session. I will concentrate more on the Italian situation because I know it better, and I think it's a very interesting example also for the Brazilian people that are here in this room. Why am I saying so? Because between 2008, the Great Recession, the Great Crisis you mentioned, and 2013, the Italian economy suffered the worst slump in its history. We had a double-digit recession, and GDP went down overall by 9 percentage point. Household spending, more or less the same figure. Investment fell by 30 points. Industrial production by almost 25. And employment by 4. It's actually more or less the same number that you have here in Brazil over the last 3 years. Roughly speaking, the same situation. The double-digit recession in Italy was the most severe in Europe, maybe excluding Greece. But among the larger countries, it was the most severe. But the good news is that since then, over the last 2 to 3 years, the economy has gradually improved, recovered. Initially, thanks to external demand, and now more related to domestic demand. We still have a significant contribution from exports. And the banking credit resumed. I don't want to talk about banking credit right now. I will leave it for the next section. But the banking system is recovering as well. It's working again as a banking system should work. And we expect this trend, to continue. As you mentioned before, this is rather a good moment for the European economy. Italy is actually lagging a bit behind. I mean, if we think that we expect growth to be around 1.7% in EU this year, Italy is around 0.91. So still lagging behind. So there's some structural story behind. In the next 2 minutes, I want to point out two important questions. The first one is regarding the European Central Bank, the ECB policy. Because, I mean, there's no need to say that the common monetary policy has helped a lot. You know, it has given an important stimulus to all the components of the demand. And when I talk about common monetary policy, I refer, you know, to a package consisting of, you know, low, zero or below zero official interest rates. This is the different story from Brazil. Other than that, you know, some targeted operation like the targeted long-term refinancing operation, so like, you know, new tools that we invented actually during the crisis. And finally, the asset purchasing program, the APP, what is also known as QE, quantitative easing. When I say there was a good impulse from such policies, how do I measure that? I was looking for some data, and I found that according to the ECB, over the next 3 years, all this package of monetary policy will give a boost of 1.5 percentage point of GDP over the next 3 years. So it's basically 0.5 each year. And for Italy, the impulse is even greater, around 2 percentage points. And then we will see from the German colleague the view from the other side of the Alps on these policies. And I think such policies were important also to lessen financial fragmentation in Europe. Because basically at the time of the sovereign crisis, we had the financial markets in Europe fragmented, segmented, and we had a very high CDS, or credit default swap, on Italy, ranging about 500 to 600 basis points. This is similar to what happened to Brazil in 2015. So these policies help to, basically two-thirds of such spread was due to the risk of redenomination. So the risk that the euro would, you know, break up. So such policies help in that as well. And they were helpful in warding off a deflation trap, basically. But monetary policy is not, you know, the tool to foster longer-term growth. I mean, you cannot think about, you know, solving all the problems with monetary policy. And if you need another set of, you know, tools to address, you know, longer-term growth problem. Let me go back to the case of Italy. In the period from 1999 to 2007, so that is before the Great Recession, we had a growth on average of 1.5%. And if we disentangle this 1.5% in, you know, labor accumulation, capital accumulation, and total factor productivity, which is, you know, efficiency, we find that this last factor was just 0.1% in Italy. So basically productivity, I mean the way you put together labor and capital was, you know, stagnant. This compares to 0.6 in France and 0.9 in Germany. So this is to say that we had some productivity problem before the crisis, and we are still facing such problems. And how do you address such problem with structural reforms? And I don't want to talk, in detail about structural reform in Italy over the last few years, but I mean, we have done some job in terms of pension reform. This is another good point for Brazil. Education, the other area like the public sector, productivity in the public sector, which is of an interest for Brazil as well. So this is to say that other than the short-term interest, there is a longer-term issue, and to foster growth in Italy and in Europe, you need a concerted. You need structural reforms, and I'm leaving aside all the fiscal problems that we might tackle in the Q&A session. But that was I was just wanting to mention the ECB measures for the short term sort of problem, but you need to consider a longer term perspective and structural reform.
Thank you very much.
I think it works, yeah. So, well, let me sum up the picture and give you a very short overview of what the current economic situation is in Germany, because I think Cor already gave us a very good long-term vision about the European Union, about the euro area, and we know a little about the policy of the ECB. So, to answer the question, where to Europe or where to Germany, I think it's necessary to know the situation right now. So, and it's quite easy for me to talk about this because right now it's a quite, how to say, quite nice picture that we have for Germany. So the German economy right now is quite dynamic and growth is quite robust and positive. We just heard that today Euro area GDP was released at about 0.5% quarter over quarter. For Germany, it's not been released yet, but it's going to be around 0.6, so even a little higher than for the euro area. Yeah, well, things are different in Italy. After a strong fourth quarter as well, so the last month of 2016 were already quite robust in Germany with a growth rate of 0.4%. Well, where does this growth came from? One important sector in Germany, as we already heard, is the industrial sector. I think a lot of you might be aware of German cars, which are, well, seen around the world, I'd say. And, well, a lot of them are produced in Germany too, so the industrial, but by the way, we have some other products as well, not only cars. So, but nevertheless, the industrial sector was quite robust in the last months. It increased production markedly, and available short-term indicators or sentiment indicators project that this growth is going to be to continue to go on. Also in the construction sector, growth is quite robust, especially for housing investment, because of the low interest environment that we currently have in the euro area. Housing investment, so a lot of private people build houses, buy new apartments, so housing investment is or improve their existing apartments, houses. So construction is a very important part of growth right now. But most importantly, I think, is private consumption, which was in the last years quite robust, quite strong in Germany, which it hasn't been in the past. So before, we saw some solid wage increases, and also this low inflation environment helped to increase real wages, which in turn increased real consumption. And this was one of the let's say backbones of the German growth in the last quarters. And the second one is exports. I already talked a little bit about car production, but well, Germany is very export oriented and is strong in exports. So to give you just a few numbers, in the last months, January and February, where we have already data, nominal exports increased by about 7% compared to the same period a year ago, which in numbers is in the 2 months about 200 billion euros, which is about 680 billion reais. So just in 2 months. So you see, Germany is exporting a lot, and the main increase in trade is with countries outside the euro, the European Union. Their trade increased by about 10%. But well, trade with Brazil also is important. And to give you some numbers, in 2016, exports and imports together amounted to about 16 billion euros, which is more or less 54 billion reais. So Brazil is an important trading partner for Germany. Turning to the labor market, which, as I already said, is closely connected to private consumption, and the labor market development in Germany is quite yeah, it's a very good story. It's a very good story. The arguments why the development is so positive, so good, they differ a little bit, but I think one can agree, or the mainstream view, I'd say, is that the reforms that were made at the beginning of the 2000s, in about 2003, which were criticized heavily at this time, so which reminds me a little bit about on the protests right now here in Brazil on against the labor market reform. Well, it was not exactly the same, but at least it was comparable in Germany. So those reforms, which tried to liberalize a little bit the German labor market, they helped a lot, and they enabled the economy not only to get through the euro area crisis or the sovereign debt crisis much better than other countries. It also led us to new record levels in employment. So in March, which is the recent number, employment reached about 44 million people at a population of about 80 million in Germany, which is a record level, and it was never reached before. And so just in the last year, there were about 1 million jobs created in Germany, more or less. And the unemployment rate, the other side of the next side of the labor market, decreased and is now about 3.9%. So more or less we have full employment in Germany. This brings me to the last point, inflation, which is especially in Germany a very sensible topic, and especially in the euro area, inflation expectations between different countries, or inflation aims, so to say, about different countries might differ a little bit. But well, in April, it's expected we expect inflation to reach about 2%, 2.0% in Germany, which is more or less the same level as in the euro area, where it's at 1.9% right now. But it is important to keep in mind that right now the inflation rate from one month to the other differs heavily because of the oil prices. Last year we had a large reduction in oil prices. At the beginning of last year, it reached about $27 per barrel, and now it's about 50 US dollar per barrel. So this is an effect that, well, reduced inflation rates last year largely, and now increases inflation rate this year largely, but doesn't really reflect the price dynamics that are going on in the economy. So it's important to not only look at the monthly inflation rates, but also on another kind, let's say, of inflation rate, which is core inflation, which tries to measure more or less the basic development of prices in an economy, and does not include more volatile aspects, as for instance energy. But nonetheless, core inflation is also, at least in April, where we have data for, increasing to about 1.3%. So we see this little upswing in inflation closer to the ECB target of about 2%. So all in all, I'd say the outlook for Germany is absolutely positive. It's quite robust, and it's good right now. So we had growth of about 2% last year, and it's going to be around 2% this year. But, well, as always, good things come to an end. So at this point, I'd like to make a little commercial for the latest Bundesbank monthly bulletin, where we so it's a publication of the Bundesbank, of the German central bank, and there my colleagues in Frankfurt analyzed a little bit about potential growth of Germany, and the development of potential growth in Germany is not that positive. So right now we have an absolutely good view. We are leading in the major advanced economies when it comes to growth, but in the longer term, which is better described by potential GDP, this potential GDP is decreasing, and because of demographics, because Germany has an aging population, just as the same as, for instance, Italy or other advanced economies, and also Brazil is going to get to this point, not right now, but at some point in the future. And because of this demographic drag, so to say, potential growth is going to be below 1%. So right now, what we see, the growth rates I talked about 2%. They are way above potential those potential rates. In this way, we have a business cycle. We are on the upper side of a business cycle, but the longer term is not that quite positive in Germany, which hints directly at necessary reforms in Germany, structural reforms that we might talk about later. Thank you.
Well, thank you very much. Those were remarkable speeches. Fantastic. Thank you very much. Just let me, before open to your questions, I'd like just to propose a reasoning, a reflection here. Now, Carl von, you have mentioned a very happy expression, like is to reboot the computer, but the virus is still there. And as long as my colleagues were talking, I was just that much just giving away, you know. And the point, the bug is here, yeah. And the point is, I guess this virus, I guess, I know, just for us to talk about, no, I guess it has a very specific name, which is productivity. As you have mentioned in the case of Italy, you know, the total factors productivity just grew 0.1%. And like in France, 0.6%, and Germany, 0.9%, which comes closer to 1% yearly in long-term growth. Okay, and so I wonder, is that consensus that came after Second World War and grew stronger throughout Bretton Woods, and somehow got slightly weak after, you know, the liberal consensus of the 70s and the 80s that you were mentioned? You mentioned. We agree on principles and so on, just, you know, to build an Europe that's united and prosperous to everyone. I wonder, is that an easy task to share prosperity, friendship, solidarity among so different productivity rates in different countries? Isn't it a very important problem regarding the future of Europe? I mean, how are we going to get together? I don't know, like Portugal, Spain, with all due respect, even Italy, with no Germany, and even France, and even Dutch in a sense, no, Netherlands. How do you feel about that?
Well, I think it's a good question, but I think that productivity is well, more or less, as Giorgio said, we can't measure it, so it's not something that you can grasp or something that is like visible for everyone. But it's more, well, the way we do our work. The way we try to be more efficient working. The way we introduce computers and machines into our in industrial sector, in other sectors, in business sectors, and services sectors, and well, to help increase productivity, my personal view, my personal view is that you need to let the market play its forces. So because I'm very skeptical about the government knowing where best to invest and how to increase directly productivity, because those direct measures is always, they will have short-term effects, and that's because that's the way. That's why politicians like those those policies, I'd say. But the longer term increase in productivity is only achievable if you reduce restrictions in sectors, if you reduce entry barriers, so new competitors with new ideas, with new techniques, with better productivity are able to enter the market. So this is when it comes to productivity. And the other thing about sharing, living together in a peaceful way and sharing ideas and visions, I don't think it's directly connected to productivity, but I think this political view it's a little bit another topic in my view.
Of course, government plays a very important role in the economy, and we fully agree on that the government should not fix prices in the economy. That will be, well, no implicit criticism is intended here. So when you go and fill your tank here, yeah, just imagine that this was decided in a board meeting of Petrobras to charge you 2 reais 19 for a liter of Consul. That is not a role government should play. I fully agree. But when it comes to long-term decisions, the market will not do certain things. Let me give you an example. There is a, if you use the word productivity, I'm very unhappy with that word, because the 25 lowest educated people in my society, in Holland, yeah, they will probably think that you mean that these people don't work hard, that they are lazy. That is not the case. These people have a lower education or lower capital availability. They cannot make the investments that are necessary to arrive at the same level of industrial output per head of the population, which is what it is. And the government has to make sure that the population has the right level of education. And I think more European countries should follow your example in education, in that you give the industry a larger role in that. We still send kids to school and we teach them what we think they will need, and then they come to the labor market and the employers need something different. I went to study biology. Everyone told me that would be a brilliant career, and then when I did my PhD in 1980, the only career perspective was a secondary school teacher, which I loved doing as a student, but not for 40 years. Yeah? So I decided to make a big shift. Government plays an important role. Government has to prepare the population for a certain role it plays. If you don't educate your people, you make an implicit choice for low productivity. It's as simple as that. And the industry will not generate that. The industry will look at all the options. They may move their investment to a country where electricity is cheaper or where labor is cheaper, and that brings us to another challenge Europe is facing, and where we again are thinking a bit different from country to country, and especially if you compare us to the United States. In Germany, in Austria, in Switzerland, in Holland, and northern Italy, and in other places, the majority of the companies are not owned by banks, where they have a hired management, where they have an appointed board of directors. They get IT professionals and management professionals from outside, and basically everything comes from outside. The money comes from outside, the management comes from outside, and the labor is treated as a commodity. That is not the model we have in the countries that I mentioned. Most of the companies there that guarantee the employment are not the big multinationals. They are small, family-owned businesses. And we have a lot of companies in Europe that are owned by families, and they have been generated for generations. We have entrepreneurs who started making steel frames in the 19th century, and are now, their grandsons are now, let's say, high-tech industrial producers close to a place where I lived for a long time, just in Germany, near Kleve. The Gimborn family has looked after Kleve for the past 1.5 century. And that is part of their vocation. They are not in it for the money. Of course, they want to survive. They want to prosper. They also need a new car. But they feel a responsibility for their community. And they stay there. They have not moved their investments to China. They have been smarter than that. They said there are 2 ways to do it. I can now go hunting for the bottom of the spiral, where is the labor cheapest, and I will find it, and it will work for a number of years, and then it will come to an end, because you have to reach the end of the industrial cycle for that type of product. So it's better to be smarter, innovate, make better products, make sure that your people are skilled. And governments play a role in that. So leaving everything to markets, I would be reluctant to say that would solve all the problems.
I don't want to get into debate, market versus government. I guess that governments have a role, at least in making the right legislation. So just cut this conversation. Now, your question was rather, having the euro in mind. Like, how can you bunch together such different countries? And in my remarks, I was mentioning that, in my view, Italy had a problem with productivity that was coming from before the euro. So this is something that you cannot solve simply by devaluation. And actually we have, in our history, if we consider, for example, the 70s, because we basically had some sort of fixed exchange rate from the Bretton Woods up to the early 70s. And the European Union was, under this umbrella. So when the system break up, we started trying to find solutions. So we had the how was it called? The European snake. The snake, yeah. The EMS was in the 80s. So in the 70s we had, we were trying to reach agreement on, finding fixed exchange rate system. But it wasn't working in the 70s, and Italy was all the time having a devaluation, and then inflation kicked in, and then another devaluation, and then inflation kicked in. We are not talking about, Brazilian levels of inflation. Nevertheless, we reached about 20% in 1980, which is pretty, a dangerous threshold. Then we had the European monetary system starting from '79. So this is to say that we have always tried to find, a sort of, fixed exchange rate regime. This is because we know that, devaluation is not the right solution to economic problems. So indeed, you need to work a lot, and governments is important. And we made some reforms in the last 5 years. I failed to mention the labor market reform as well. The topics are the same. You're in Brazil, you are discussing basically the same, issues. But there's, the work to be done is in that direction. and government and markets complement each other. I mean, I agree with both of you, if you may.
Thank you.
But there should be agreement in a society on which dot on the horizon you are going.
Yeah,
And
there,
so
structure.
yeah,
yeah.
so to be honest, I think Brazil could serve as an example there. Brazil was able to define a common goal for labor, for industry, for trade unions. I'm not saying that it was all done on a voluntary basis. Getulio Vargas had a pretty violent approach in imposing his will, but he had the vision that you had to keep everyone together by looking after the interests of all the stakeholders. And perhaps that is what we should try to do again in the foreseeable future in Europe.
Well, thank you very much. Fantastic. And now it's time to open to the audience. Anyone? Yes, please.
Hi. Last week, Brazilian lower house has approved the labor reform bill in order to give more flexibility in the employee-employer relationship and to give more efficiency to our labor market. And I would like to hear from you some international experience, especially on Germany. From 2002 to 2005, Germany has experienced a quite significant labor reform, the so-called Hartz Plan. And if we look at the unemployment rate and compare like Germany with France, we can observe that Germany unemployment has persistently decreased since this reform, and nowadays is one of the lowest, I don't know, in the European Union. And I would like to understand this impact of rigidity of unemployment in terms of potential GDP and how this can be a model for the Brazilian reform.
Okay, a couple of more questions, and then I pass the word to our speakers.
Hi. Eike. So actually, my question is, I write it down, but I believe it's a little extensive. But in summary, I would like to know that now we see that the European Union face quite a lot of delicate situations. So you have the situation with the US a few weeks ago, specifically with Angela Merkel, a rude situation, and then now we have also the Brexit, a few nationalisms, environment in France and Spain, and etc. So, and I would like to know, so actually situations that involve quite a lot of social and political movement. So having in mind what I was told before, I would like to know why negotiation now with Brazil? So you mentioned before that the conversation European Union and Mercosur start again to develop, and this is going on already 20 years. So now this conversation start again, having in mind that you have such a delicate situation, and having in mind that what was told before, that if it is not about money, and if it is not about anything, and about also if you need discipline to prosper, why Brazil is a focal now to go ahead and talk about agreements. Thank you.
Hi, good evening here. Yeah, sorry. So my name is Fabio. My question is taking advantage of the colleague that asked about Germany. So you mentioned that Germany has been so well, and we all know about that. Of course, Germany might be one of the best countries that took advantage of European Union for the last years. But how about the paradox or even the debt trap that Germany have with all the countries, and we watch this closely with Greece, but we know we can listed all the pigs involved. So is Germany think about any plan B for the European Union or not?
Thank you all for the questions. Just allow me to develop these three questions. Allow me, no, you, sorry. Just I will pass the word for them, and then please hold a moment, okay? So, if you like to address previously.
Yeah, absolutely. So, like, two of your questions concerned Germany. So, let me start trying to answer your questions. When it comes to labor market reforms, I think, and as far as I know, a lot of studies showed also, there is not like the recipe to solve problems in every country. So it's not like you have this one solution that is going to, or this one measure that is going to reduce or reduce all problems that exist in an economy, because each and every economy is a little bit different, has a different aspect. For instance, when we talk about Germany, we have a very strong industrial sector, and I think it's what works in Germany with a country with such a high industrial sector does not necessarily work in other countries that are more focused on services, for instance, the UK. So just this as a starter, it's not like one, in my view, not one measure that is going to solve every problem. But when it came to Germany, and you were absolutely right, Germany was known as the sick man of Europe just around 2000 or 2003. So we had large problems. Unemployment was in two-digit levels, and everyone knew, or not everyone knew, but everyone knew in their head at least, there needed to be some reforms to get down the number of unemployment, to increase the number of employed people, because whatever you think about labor market and labor market laws, I think that someone who has who works or has an employment is always better off than someone who has not, who doesn't have an employment. So, what was mainly done in Germany was, just to give a very short sum of this, is one of the main aspects was to get together different transfers, different governments transfers in one measure, so that people did not go to one institution before and then to another, and no one really know who was there and who was there. So we mixed it up. We put it together, and now you simply receive this. What's it called? I think it's called Arbeitslosen, so unemployment money that you benefit that you receive. But yeah, I think, as I said, it was kind of special for Germany, but most importantly, all measures that increase flexibility in a labor market, that increase the capability of firms to adjust to different market situations helps. Of course, you will have losers. That's always the problem with labor market reforms and labor market situations. You have insiders and outsiders. Insiders that have a job and outsiders that don't have a job. And well, whatever kind of reform you're going to do, you're going to create some losers. And the big question when it comes to labor market reforms, and I think right now too in Brazil, how do we handle the situations with the ones who are going to lose? Do we simply say, okay, that's life, you need to adapt to this, or isn't there some other way to maybe soften the burden of this adjustment? Hello? Okay. Yeah, I think, especially because I think your question was focused on the labor market reform right here in Brazil, if it's good or if it's necessary or if it needs to be changed. So I think if it increases flexibility in the labor market, it allows firms to adjust to a changing environment, and this always helps in the long run. But as I said, in the short run, you might have losers, and so a good reform might try to increase to insert some measures that look at the losers too. And well, just to take the other question too on Plan B for the European Union. I'm not aware of any kind of Plan B that exists, and I don't think that we need a Plan B because well, we lived through a lot of years of crisis, and we've seen a lot of problems in the European Union and in the euro area specifically. But on the positive side, on the other side, you also saw improvement. You also saw movement. So, in my view, with a crisis, it's not always game over, but it's always the situation where people realize that things need to be changed or need to be adjusted. And the euro area, for instance, when it was created, it was not perfect. It still not is perfect, so it needs to be changed. And I think that, well, the crisis was more or less necessary to show people that the changes need to be made. And specifically to Greece, it's a personal opinion, had nothing to do with what Bundesbank the German central bank might think. So just as a first on that. Whenever it comes to Greece, I mean, Greece is a sovereign state. Greece can decide whatever it wants. It can on its own leave the euro, it can stay in the euro, it can leave the euro area, it can do whatever it wants because it's a sovereign country. If it decides to join an IMF program, to join another program, or to whatever it does, then it's its own decision, and obviously all other decisions are worse. So this is still the best decision that Greece can make. So that's my point on that.
Shall I try to go into the unrest? You're right in, let's say, in seeing a lot of turmoil, unrest, social unrest, xenophobia. You've seen all kind of things that at one point in time has given all of us nightmares. Holland went through elections recently, and you know there are always prophets of the end of the world. So I saw the television international channels like CNN. They thought that the world would collapse, and in Holland there would be something very terrible. I never believed it. For the very simple reason that we have no dominant majority in the country. I think the highest election result the party ever had in Holland is 35%, and that is not enough to govern. So you always have a coalition, and everyone refused to share the same bed with that political party that was led by a demagogue, and let's say, trying to seduce parts of the population with populist propositions. So it doesn't happen. But there is fertile ground for people who are dissatisfied, who are disenfranchised, who have lost their job, who don't have the skills to survive in society, who, because of their background, feel excluded. The word Muslim has not been used, so I'll throw it in the room. A lot of people make the analysis that we have an Islam problem. Well, I don't agree. We have young people that radicalize, but they are not new immigrants. They don't come from the Islamic world. They are not recently immigrated from the Middle East. No, they are third generation Dutch people of Moroccan origin. And apparently we have not been able to absorb them in our society, to give them a place where they can prosper and where they are being respected. And I think if you look at the people who have been put in jail, who have a terrorist conviction, most of them have only added a terrorist conviction to a long list of criminal activities that they went to jail for before. So do not think that whenever there is a crisis, there are populists, there are all kind of turmoil. You see a lot of flames on the television. You hear about bomb attacks, and it's taking place in the European Union. Do not then make the conclusion that all of that is related to the European Union, because it is not. The main setback in our prosperity was generated by a number of speculators on the other side of the Atlantic Ocean. And now I'm being extremely tough. You suffered the same consequences in the same period. It was not so different here. We're recovering from that. Then there are other developments. Globalization is another word that was used in a positive way 10 years ago and is now used to explain everything that is negative in our societies. The most globalized country in the world is Holland. It was published the day before yesterday by the University of Zurich. They do a lot of research in that. We are the most connected, we are the most open, we are the most globalized society. And to be honest, we were probably in Europe with Germany the country that suffered less of the whole economic crisis and everything that is now being attributed to globalization. It has served us well. And it has to do with the fact that we were not dependent on an industrial sector to the extent. We were more or less, let's say, in the same boat as the UK. There were similarities in our economic structures that work to our benefit. We will grow out of all those problems, and our priority should be to make sure that everyone has a possibility to find a job, that everyone is able to come to full development of his or her own potential. We have to maintain the liberties, and we have to maintain the law in the sense that, let's say, if we say there's freedom for all, then there is freedom for all, and which means that you cannot impose your Christian values on your Jewish neighbor, or your Muslim values on your Christian neighbor, or all the other combinations that are there. The government should provide for all. We should be secular in that sense. We are. And make sure that you recruit the best politicians you can find, and make sure that you have honest civil servants. So we pay our politicians very badly, because we want to get them for all the good reasons and not for all the bad reasons. But we are not always successful in that. I told about the populist argumentation of finance ministers coming back from Brussels and then blaming everything on the Commission. That is not what you want. The origin of the problems is not the European Union. The solution will be. The solution will be. So I really, sometimes my jaw drops when I watch a certain journalist on television making an analysis on impressions that they got during a 2-day trip and a subscription to, Reader's Digest. Mercosul. Now, when you try to negotiate a free trade agreement between two countries that are totally devoted to the Chicago School of Economics, like the UK and the United States, it will be tough, but they will get there, because they have basically not that many things to take into consideration. If you're structured in a different way, Brazil, for example, Brazil is not Mercosul, but let's take Brazil as an example. Brazil is a hybrid economy. You have high tariff walls, which goes with the part of the economy that needs protection. Part of your labor force will not be able to compete with people from China. So it's as simple as that. It has to do with your trade laws. It has to do with all kinds of things. And the only way of protecting that is building a higher wall. Now, if you build a higher wall, you make it very difficult for people to come in, but you make it also very difficult for people to go out. Luckily, you have a captive audience of 220 million people who will buy anything and who will buy who will pay any price. So, you know, your toys for your own industry, because you know, you do not have the opportunity to buy an Apple computer for $600 like some of us have, because you are behind that tariff wall. It has good sides and bad sides. Your industry that is exporting, you have excellent industry. KLM has bought, I think, 34 planes from Embraer. They're made next door. Top. Really, they were not bought for any political reason. They were bought because they are the best and most economical, and it's wonderful. But I don't know how many tax reais you have to pay for every plane you export, because they have to be subsidized to get across the border. Why Mercosur now? We're trying to enlarge the common ground. We are trying to find possibilities where we can do trade that is mutually beneficial. In the past, we have tried that a number of times. I think we have started 3 times in negotiated a free trade deal with Mercosur, and it's always easy to start it, and it's always very difficult to end it. And the ending has to do with a very simple mechanism, as the colleagues explained to you. Whenever you make a structural change, you have people that win and you have people that lose. Now, if a government does the negotiations on behalf of Brazil, for example, they can negotiate and they can come with what they think is a good deal. And David Ricardo's laws, you know, they're not frauds. It's not fake truth. It's a good law. So there is money to be gained for everyone in free trade. But then if Itamaraty comes to Sao Paulo and goes to Fiesp and explain that this is the agreement as it is on the table, then you will have people who say, oh, let's do that because they're going to win, and other people say, never, yeah, because they're going to lose. And if then you are not able to come to a consensus, make the adjustments, find the monies for the transitions of those that are going to lose, yeah, then you will not have a deal. So we've tried a number of times, and it has always ended in frustration. What has changed is that both the Brazilian government and the government of Argentina flagged this might be a good moment to give it another try. And that is why we are trying. And we hope to do that in a successful way. Well, perhaps not concluding it before the end of the year, but at least giving you a clear view of what the progress is. We are not looking for free trade at any cost. You know, pork meat in Holland is €5.28. Everyone can buy as much as he wants if he eats it. Yeah? And to be honest, if we can lower the price to €5.23, yeah, that would be fine. Yeah? But to be honest, we are more interested in food security. We are more interested in sustainability. We are more interested in the quality of our food. We are more interested in people losing weight and becoming fitter and living longer than we are in reducing the price of the kilo restaurants. So it's a nuanced thing. We are not in it purely for the money. Have another look at the values. The whole package is on the table, and we are very hopeful that, you know, we are the largest importer of your agriculture produce, and we sell it on, and we convert it a lot, and we make meat out of it, and then we sell that to the Italians, and the model works for us. I'm hopeful that we will be able to get somewhere, because I think people realize that if you make your tariff walls too high, if you protect yourself too long, if you try to avoid a transition to a modern economy too long, if you do not invest in upgrading the productivity of your own economy, in the long term, the costs are going to be prohibitive. I think that is the main lesson. I think we will get there. But please do not say that all the problems in Europe were made by me or the European Union. It's just not true.
Thank you. Great. Couple of more questions, and then I would like to add something. Please.
Good evening, everyone. It was an interesting answer from you, sir. My question is, at the end of the 20th century, we had a very high hopes regarding international trade, and especially after 1994 at Uruguay round at the WTO. This is a discussion that suddenly no one talks more about it, and I would like to hear from you if there's a possibility to consider, perhaps not now, but in the future, to talk about multilateralism organizations such as WTO and the negotiations there with other countries, not just in European Union and Mercosur. And if not, your opinion in what went wrong. So the discussion on the WTO and our hopes, well, has decreased regarding this matter.
Hello. Does terrorism or the insecurity that comes with the threat of terrorism have an impact on European economy?
Hello, my name is Leonardo. I'd like to address two, I think, very important issues here. Yesterday we were discussing about migration, and we tried to separate what would be asylum or refugee kind of migration, and what would be economical kind of migration regarding labor and qualified migration. And sorry, let me see the names again. Mr. Giorgio, sorry. Talking about productivity and regarding demographics and how the aging population of European Union and again here in Brazil. And I was actually studying about how the average couple in Europe and how they're having, like putting in right words, they're having an average of, I think it's 1.2 or 1.5 babies a couple. I'm not sure about the right number, but if you consider the second generation of Muslim Europeans are on an average having 2 or almost 3 babies per family. So if you put on 2 to 3 generations right now, so considering European Union in 50 years from now, so you're having a drastic change on your demographics, considering less, let's say, and not being prejudiced here, but non-European per se, but having a lot more of Muslim origin Europeans actually. And as you were saying, they were actually not being fit in Europe, and that's one of the main reasons of the real terrorism. And I'm just putting that because we are saying, oh, there's a productivity problem, there's a labor problem there, and that may be actually addressing a or presenting itself as a solution somehow, as a migration problem that's not being presented itself because there's a prejudice in one side, but there's from the inside of European Union something that's being born from the problem from the inside. So I would like some discussion on that. And the second issue is very short from from Dr. Kaur, please. I think it's very, it's important, I don't know, whenever Mr. Eike talked about the industrial production of Germany, I saw that Mr. Giorgio kind of shook on his chair over there. So I was going to ask Mr. Kaur whether he preferred Porsches or Ferraris.
I'll start, but I'll try to be brief, and I'll give the gentleman the chance. To be honest, I've had many cars. I have an Audi in Holland. It's now 21 years old, and the reason that I keep it is that when it's 25 years old, it's tax-free. But here I drive in a car that belongs to an Indian company. It was produced in the UK. And you know, it's not so relevant. I'm not a car person. I have other hobbies, art, yeah, but cars, you know, for me it's a means of transportation, and if it has the safety. Though I have rediscovered Fiat in Brazil. Yeah, because you know I grew up with Ladas, yeah, the 124. You make some very beautiful small cars. Yeah. Terrorism, Islam. Let's try to be not overly politically correct here, because it will take a lot of time and it will not contribute to clarity. It will become, let's say, in a declaration of faith, an act of religion, as Max Weber put it. It doesn't contribute anything. I was ambassador in Kuwait, in Qatar, in Bahrain, and those are Muslim countries. There is no doubt about it. I've actually been posted twice to Kuwait, early 80s and in 2004. These societies are for 90%, 95% perhaps, composed of moderated people who want to coexist, who want to make a living, who want to send their kids to school, and perhaps go on holiday and buy a car. Yes, and then there are traditions, and they have a different language, and sometimes they look different, and some of them wear an hijab. So what's the problem? Yeah? In Holland, we have people that go on street with a Bible under their arm, and they lecture other people at street corners. We have people who go to shul and wear a kippah. So, you know, most Dutch, I would say over half Dutch people are of foreign origin. My family came in 1815, and they came from a Dutch-speaking area in Germany that was lost to the Germans in the 13th century. It can take a generation, it can take two, it can take three, but as you make a commitment to have an inclusive society where there's room for everyone, where there will be no discrimination, and where you maintain a secular state ideal, and where you make it clear to everyone that there will be no Sharia law in Holland, yeah? At least for the foreseeable future, and then I mean the coming 5 centuries. It has to work. To be honest, we can be proud of our Christian heritage and what have you. If I take you back a number of hundred years in our history, when most of the Sephardic community was looking for another place outside Spain and Portugal, they found their way to Holland. And it was not funny to be a Jew in Holland in 1610. The big synagogue was built in 1675, and after that there were no more problems, perhaps in a small village where you had a Protestant pastor somewhere who had different opinion. But you know, the capacity of a society that is informed to absorb other thoughts is great, and I'm not convinced that the analysis that a lot of people make about the causes of radicalization are completely correct. Islam in itself is not a threat to me or to my society, but you will find idiots in every faith, in my faith as much as in Islam. So I think we will find a way to deal with that. Exclusion is not the solution, not now and not ever. I think.
Okay. Let me first start with the question on terrorism. I mean, and the impact on the economy. I mean, of course, there's an impact. I remember that after the 2005 bomb attack in London, you know, the people there, you know, used to say, "No, it's going to be business as usual. No, we're going to go on, you know, as everything business as usual." And in fact, it's not. I mean, there is, of course, an element of uncertainty, which, you know, is detrimental to economic growth. But I think that in general nowadays, I mean, other types of uncertainties have you know, more importance. Basically, I'm thinking about policy uncertainty, and when I talk about policy uncertainty, I'm referring to, you know, who knows what's going to happen in the U.S. regarding fiscal policy, regarding international trade. So those are the type of uncertainty that, in my opinion, are, you know, having a you know, a greater impact on the economy. I mean, international trade is an issue. Where are we going? And let me just comment on the EU Mercosur. I think it's the right time from our side as well, because during those years, there was always one country on our side not wanting to get the deal. So perhaps this time, you know, everything is pointing to the right direction. The other question was on basically on migration and demography. Coming from a country that last year recorded a negative growth of population, I think that migration, you know, I can't remember where it came from. Okay. In this respect, migration could help. You know, at the end of the day, you need someone. You know, we are still on a pay-as-you-go pension system. So basically, who is working right now is paying for the pensions. So, in this sense, the more workers, the better. I think what is we have faced, you know, migration for a long time. It's not just the last few years. Perhaps these times, you know, we have a huge, a bigger event. Migration is there is a perception that it's becoming a big issue, because there's many people wanting to come, and there's need to to organize these flows of people. But I'm from my personal point of view, I think migration can actually help a lot in a country where the population is decreasing.
Thanks. Would you like to just conclude?
Okay, so just a few words on the question, if I got it right, on multilateral agreements. Why don't we see any more multilateral agreements right now? I think, well, very prominent. Well, generally speaking, right now I think there's a heavy resistance against any kind of multilateral agreement, because people are focused on the bad side, on the things that seem to be not improving but going worse for them. For instance, well, as we already talked about other agreements, you have winners and losers. So if the Mercosur and EU negotiations will come to an end, then you have a larger market. You have more, economically speaking, you have a larger market. You have more products for everyone. So for each and every person from this side, it should be the person should be better off. But of course, you will have people that, let's say, that worked in the agricultural sector in Germany that will lose their job, say, because agricultural products of Latin America are more competitive. So you will have losers. So, and right now, which I think increases this situation or worsens the situation, is that the internet and like the global interconnectedness that we have has lots of positive sides as well, but it also has the ability to create a large public furor in very little time and with very little resources, and to get people on shouting against something. So simply being totally against something, but don't totally understand what the treaty is all about. For instance, another example is the TTIP negotiations between the European Union and the US, which, well, in Germany at least, the discussion at the end was focused on those, I'm sorry, I don't know the English word, it's those specific courts that are going to negotiate disagreements between companies and states, and which will be independent of states, and which had some very good reasons to be in place. But, well, the public discussion only focused on the point that some people, not elected people, will decide over countries. That cannot be. So, and this was, all the rest was mainly left beside. So, because of this point, well, TTIP is, or not just because of this point, but this is one explanation because why TTIP is not going to happen soon, in my view. So, one important lesson out of it is that you need to communicate much better the improvements, the good side, the advantages of any kind of agreement to be accepted in the population. And just a short point on migration and what you said about average number of children between domestic population and with migration background. I think religion is not the most important point, but it's education. People need to have a good education, and that's the most important thing that influences their habits, their way they act, and not their religion. This is my point on this. And just the last one, Porsche versus Ferrari. I'm riding a bicycle, so that's good as well.
Well, I'd like to conclude our session tonight. It was remarkable. Thank you all very much for your speeches, which was fantastic. Just like to finish, to conclude. Well, it seems that here in Brazil we share a couple of challenges, in a sense that we also are starting at least to live in a demographic shift in our demographic pattern, which is towards an aging society, just like you, but it will take some time to get there, but in a couple of decades maybe we've reached that point. That's probably. But with a very important difference, is that we have a pretty lower productivity than Europe, that's for sure. Our per capita GDP is just a fraction of European Union as in general, and which leads us to finally 2 points. It seems that we are facing something that you have mentioned, David Ricardo, back there in the 19th century. And as a teacher of economic thought, it makes me glad to remember Ricardo. It seems that we are facing what the classicals call the stationary state, in a sense, which it comes from demography or whatever, productivity. So, and it seems, oddly, by the influence of immigrants, they are, maybe they came from rescue, I don't know, that's some sort of reasoning. But even so, I guess one important point for us in Latin America is that personally I am a descendant from Europeans, from Spanish, but historically we are descendant from Europeans. We were born with Europeans. We entered the world history with them. And it's important for us in Brazil as well as in Europe to remind those values, the values from Enlightenment, which are the values that you so correctly mentioned, which are the tolerance, solidarity, friendship, secular values. That's the point. It's important for us to here in Brazil in this very moment to remember those values. And the Europeans are always there to remind us that we are not in the Far East exactly, but in the Far West of the world as a cultural identity. Thank you very much, you all. We have a coffee just, thank you.